Or you have the path of working with me where I'm going to buy better than you. I'm going to manage better than you. I'm not going to step on the landmines that you may step on because I did that years ago. Got those things figured out. And when it comes time to sell, I'll probably do better on the sales side than you. At the end of the day, though, I'm getting half. So it's probably a wash.
In order to be a successful real estate investor, you need to master two very important skill sets: the skill set of negotiations and the skill set of sales. Hey gang, Russell Westcott here. So if you are interested in starting, growing, and scaling your real estate investment portfolio, you have come to the right place. And if you can do me a huge favor, you will get a tremendous amount of value from this upcoming video. And when you do, make sure you hit that like button, make sure you smash the subscribe button, and hit the bell notification to get on the insider track. In this video upcoming, I have a wonderful conversation with a good friend, Mr. Arlen Dahlin. If you've been following along on my YouTube channel over the past years, you would have seen the name Arlen Dahlin surface a few times. Arlen is just a wonderful master real estate investor who's got more than 25 years of experience in this game of real estate investing. In this video, Arlen and I go very deep into investor objections, sales tactics, negotiations, and all those strategies to help you move forward with velocity. So if you're interested in becoming a successful long-term real estate investor, pay attention to all the gold nuggets and wisdom in this video upcoming. Let's go. Now, just one of the things you guys are going to see here tonight is we're not going to do this too high tech. Like, we're not going to have fancy PowerPoint presentation decks, and we're not going to be diving into internal rates of return and regression analysis and net present values and stuff like that. We're just going to keep it real, and we're just going to have a real conversation. And that's what this is all about, is about a real conversation that you're going to have with another human being when you're going to have, whether you're negotiating on buying a property, or you're going to negotiating on if you want to wholesale a property, whether you're negotiating if you're going to have a joint venture partner and you're going to raise some capital. You're about to hear tonight from two people, myself and Arlen, who truly have these conversations with people multiple times on a weekly basis. Yesterday alone, I had two of these conversations, and you know what? Knock wood, maybe there might be a $600,000 check on the way to build 6 new homes in Edmonton. So we'll see how that goes, but more to follow with that. But here's the bottom line, is that we have these conversations. We're in the trenches, no different than you are, and you're having these conversations all the time. I'm going to start off tonight's webinar with a quick story. But before I start off with this story, Arlen Dahlin, welcome to tonight's webinar. How are you doing tonight, Arlen?
Good.
Arlen, are you feeling a little nervous?
I'm always a little bit nervous. Stuff like this. I'm a shy person.
Oh, sure, you're shy, Arlen. No, but here's the thing. Arlen, how long have you been doing this for?
That's all, pretty much 25 years. 25
years. And this whole world of online and social media and webinars and videos and all kind of this new technology, it's a little bit scary for someone who's been around of our vintage.
Yeah, I'm more of a face-to-face person.
And how are you? And so, guys, the first thing I'm going to get you to do is make sure that you follow Arlen on Facebook and a lot of the social media airwaves. He's really stepping up his game. This is not, and Arlen and I had a conversation a week ago. This isn't easy for you, is it, Arlen?
No, it's not. It's not me. I'm kind of like the guy that likes to be in the corner, like Norm from Cheers. Just quietly stay in my corner, do my thing.
Arlen.
Yeah.
Yeah. Nice. So here's the thing, guys. So here's the point I'm trying to make is no matter what stage you are in your career, you can always elevate your game. So here's somebody who's been in this for more than 25 years. Arlen, how many properties have you transacted over those 25 years to your best estimation?
It'd be around 300.
Around 300?
Yeah.
Do you have estimated dollar value?
Oh gosh, I've never tried to figure it out.
You used to have that down to the penny almost.
I did.
And you gave up tracking that?
Yeah.
Yeah.
It's not a motivator anymore for me.
So somebody who has, let's put it this way, somebody who's been doing this for 25 years, who's transacted more, roughly around 300 places, is now deciding he wants to up his game and get onto webinars and get onto podcasts and get onto social media and put out some new posts. And it's freaky to him. right? No different than you might be just starting and you might be raising your first $100,000. That's freaky too. So we're here to tell you that we understand where you're coming from. Okay. Now I know I did a pretty crappy job of introducing you here, and we're already, knee deep into this 10 minutes in. So I wanted to introduce you, Arlen, with a story, if you don't mind. Now, I think I've shared this one, but I don't know. So I'm going to share the first time I met Arlen, and it would have been circa, I'm going to really date myself, 2002 or 2003, probably late 2002. I was at a conference, and I believe it was in Edmonton. And, walking around all bravado, walking around, and I'm looking around, I'm going, who's the player? Who's the player? Who's the big players in this room? I wanted to meet the players, right? I wanted to meet the people who were the ones that were taking action. And then almost every person I talked to, who's the player? They said, see that guy sitting over there in that couch over there, surrounded by a whole bunch of other people? His name's Arlen. He's the player in the room. And I said, I walked over to Arlen all full of swag. And I said, I hear you're the player here. And I hear you do joint ventures and you raise capital. Arlen looks at me calmly and goes, yeah, if you got $300,000, you can play ball and let's have a conversation. And that was it. And I just sat there and go, just flat out, just right off the bat, if you got $300,000, we can have a conversation. Right. So Arlen, that was our first conversation that we ever had. Do you remember that?
I don't remember what I said. I remember meeting you though.
Right. But here's the thing. And ever since I've gotten to know Arlen, you're not as forthright as that first interaction. You're actually just a big giant teddy bear, to be quite honestly. And I'll make a promise that we probably won't cry here today, but we may, right? In one of our video interviews that Arlen and I did on, I think it was a 5-part series. I think we had a few tears towards the end when we were getting all a little misty about reminiscing about the good old days. So Arlen, can you fill in a few of the gaps for some of the people that if they're watching and listening to this podcast, can you fill in a few of the gaps for people about who you are, maybe a little bit of the backstory and what's led us up to this point of you in your investing career?
Well, like I said, I started in 1995, and kind of how I started was I had been pretty fresh out of school. I went to NAIT for business and marketing and so on, and I got a job in kind of commercial computer sales, so not retail, but to businesses. And I was probably only there about 2 months, and then one day I went to work, and that's my first introduction to a sheriff's notice. There was a sheriff's notice on the door. Once I figured that out, it means apparently I don't have a job now. So off, home I go. And I remember it was July because it was hot and sunny. So I cracked a beer and was kind of sitting on the deck going, oh my goodness, what am I going to do? And then I seen a little tiny classified ad in the journal that said about, a little real estate boot camp. And I just the strangest thing, for some reason, I just felt like I just really, really needed to go there. And again, being fresh out of school and not having a job, I think that cost about $400 or something like that to go. And I was about $400 short. So what does a smart guy do? He calls his mom, borrow the money from my mom. And if anybody, no, you guys don't know my mom, but I mean, you borrow money from her, it goes in a ledger. Like you don't forget, you actually pay it back. So anyways, I borrowed the money. I went to a seminar. I thought it was awesome. I was pumped. I thought this was great. And I remember at first I wasn't sure whether I thought I could do this. And I remember I found a guide. It was pretty small. There was probably only 25, 30 people. And I found a guy, he's kind of frumpy, older guy, probably later 60s, and just didn't look well put together. So I went, I'm going to go talk to this guy. So I walk up to him and I go, so what do you think of this? Do you own any properties? And he says, well, I own 16 properties. And I'm like, oh my God, if this guy can do this, I can do this. So my belief was there instantly. And that's kind of what got me started. And from there, I got another sales job, and I did real estate full time. And I mean, not full time, but I did real estate on the side along with a job till 2002. And then I quit my job and did it full time.
Right. How many properties did you have at that time when you went into it full time, when your side hustle became your main hustle?
I can't remember exactly, but it was actually close to 100.
Right.
Yeah.
And I seem to remember you also said that you needed to have like $100,000 in the bank, and you had to have a certain threshold of where you were going to be when you pulled the trigger to go full time in this gig.
Yeah, it was hard for me to pull the trigger because, again, being in outside sales, I had flexibility, so I wasn't stuck in the office. So it wasn't hard for me to do real estate on the side. But but then I just figured, you know what? Now by that time, I guess I was owned property for 7 years. I basically all I did was sell one of them, put the money in the bank, and went, well, here's my about $75,000 runway I got to really amp this up and get going. So that's what I did.
Yeah, and you were doing flipping at the time. Did you ever do like some wholesaling where you kind of did run the whole gamut? Or what was kind of
Yeah,
your
I did. I
specialty?
never focused on it. My focus was always buy and hold, but I did do some flipping, and I did. I guess you could call it wholesaling in a way, just some assigning some deals.
Yeah.
I signed deals. Yeah.
Now, did you have all the money that you needed in your own bank account to be able to do this game of real estate?
Oh God, no. Like I said, when I started off, I was barely, able to rub two quarters together.
So you had to learn the art and the science of raising capital from others.
Right, which at the time seemed like this really sucked because everybody else I talked to, bought 2, 3, 4 properties on their own before they started trying to raise joint venture money, which I'm going, that just seems 10 times better than the situation I'm in. But because I didn't have a choice, it forced me to raise money without having a track record, without never doing it before. So I did it probably the hardest way possible. So once I had a track record and once I had my own money, it made it so much easier because I had to start off the hardest way.
Yeah. Now,
I mean, the blessing for me, I always say, shine a light on it is one thing I was lucky is I did have a sales background, which definitely helped me.
do you have some formal training or is it a little bit more of training in the real life, real world in the trenches?
Well, I mean, with a couple of sales jobs that I had some training. It was honestly, most of it was probably wrong. It was training. So most of it I learned really on my own and trial and error because one of the things I knew the best job to take is to take a commission sales job because then you can control your own income, which of course is a double-edged sword. If you're good, you make good money. If you're not, you don't. So it was good training for me though, because what came out of my mouth dictated my paycheck, and how I treated people dictated my paycheck. My word, whether I kept my word or not, dictated my paycheck. So everything I did made a difference on my paycheck. So that's the quickest way to learn.
Right, is having the food on your table dictated based upon how what you produce, in essence.
Right. So when you screw up, you look back. If you lose an account or did something wrong, you look back and go, what could I do different? Not because that's what your boss would prefer you to do. You do that because that affects your paycheck. You don't want to make that error again.
Yeah. Now, guys, we're going to talk about a concept called sales here tonight. And for some people, sales is, they have a really negative connotation around it and they have a lot of fear around it. And we're going to break it down here in a second we're going to just dispel some myths and we're going to make it just truly authentic and truly genuine on the process. Now, Arlen, one of your superpowers and one of your gifts that you offer to most people, like your story that you shared was very similar to the story that I had. It was very similar to a lot of people's stories when they got started. And the part that I got from you mostly was just that you offered hope that we can do this, that we don't have to have a lot of equity to start. We don't have to have a portfolio to start. We can start without a track record. We can start without having a lot of extensive experience. But we have to start and we have to take action. That was the biggest thing I got from you right from the beginning, was a belief in myself and hope that it was possible to do it. Okay. So I just wanted to offer you that compliment as well. That's I think that's one of your superpowers, is just breaking it down so everybody can understand it.
Well, I don't know if you remember, but I remember when I met you is I said, I know you're going to do well. And the reason why I said that had nothing to do with experience, had nothing to do with any of that stuff, but you emanated trustworthiness and you emanated that you cared about people. And it has to all start there. And especially wealthy people, they can actually sense that. They've met and been around enough people. So when you have that about you, that's already a big leg up. You could say a lot of the wrong words, but you come across trustworthy and that you actually care. And then if they're going to invest with you, you actually care about their money.
Yeah.
That's where you really need to start.
Well, and you know what? Maybe some self-reflection here. Sometimes you need somebody else to believe in you first. And I think that was maybe I was really lucky that I had some wonderful people in my life that put their arm over my shoulder and said, "Come this way and let's do this." I see this in you. I believe in you, even though you don't believe in you yet. Come this way. Let's learn this. Let's go on a journey together. Right. So, okay. So we're getting a little gushy here, Arlen. let's get into some hardcore sales. Run to the back of the room. They only shipped 4 of the home study programs, and there's only 2 left. And if you buy tonight, we'll knock $500 off this price point. And we've all been to those kind of seminars, haven't we?
Been there, done that. Yeah.
and guys, I'm here to tell you 100%. There is nothing here to sell. We're not selling anything. There's nothing to buy. The only thing we're here to actually sell is sell you on a belief in you that you can do this. That is what we're here to really do, is to provide you some incredible education with nothing to sell. Let's talk about this word of sales. And why do you think people have a fear around sales, or what do you think most people think sales is all about?
Well, I think most people think sales is your ability to con somebody into something or talk somebody into something. And that's not at all what it is. Like in joint venturing, it's not selling, it's offering opportunities and checking to see if it's a fit for somebody. When I worked in sales, I was the top rep. I did the best of anybody in the company, both companies that I worked for. And the reason why is I always turned the tables and I would act, what would I want as a customer? And I always give them the best advice I could. Sometimes they'd say, I want to buy this. And I'd say, you know what? I don't know if that's for you. And here's why. Sometimes they go, yeah, you're right. Well, thank you. Sometimes they go, no, we really want it. And I go, well, okay, I'll sell it to you. Right. But I was always honest. And I think that's a big thing. So I always looked at myself when I was in a job like that going, I want to be an unpaid employee of theirs. That was my goal. So in joint venturing and selling, again, maybe just in a way you take the word selling out of it. You're just offering opportunities and you're informing people and giving them information and helping. Sometimes you're helping them make a decision. Like some people, they just have a tough time making a decision. So you might be the catalyst if it seems like a fit for them to kind of push them off the ledge to get them to go. But it's not talking into something that it isn't a fit for them.
Yeah. So would you agree it might be a fair assessment to say that you detach yourself from what you want to get out of it and you 100% focus on what's in it for the other person and if you can help them move forward?
Absolutely.
Right? Does that takes a little bit of the whole edge off of selling something?
Correct.
And guys, now don't understand that, one of the things that I'm a firm believer in is, as well as one of my earlier mentors too told me, is, you're not selling something, you're potentially solving people's problems. And sometimes it will take an exchange of money to help solve their problem. And some people might be in a position that's one of the most leverageable things they can do is spend some money to tap into somebody's network and to tap into some resources, to tap into 25 years of wisdom. And maybe, and you can do that for a low amount of money. So it might be just that's the way business is done, is sometimes you have to have a leverage point of people have to exchange money for other people's wisdom and information. Would that be a fair assessment, Arlen?
Yeah. I mean, it's no different than someone getting an RSP. They're putting money up to get an RSP to invest. It's the same thing, right? Just a different vehicle.
Right. Yeah. And people have no problem investing into an RSP and getting anemic returns, don't they?
Exactly.
All right. So let's transition the conversation a little bit and let's talk about so really just reframe sales, guys, is really you're just providing a solution to help people's problems. And you're just doing a lot more listening, and you're just having a prescription and offering a prescription for people to help them move forward. Now, Arlen, in one of your recent social media posts, you posted an analogy, which I just love. And I actually have, I've used it recently, by the way. And you use an analogy of a doctor. And
Right.
when you're having a conversation with somebody about potentially wanting to partner with you, and you use this wonderful analogy of a doctor relationship. Can you explain that for everybody if they haven't read that?
Well, basically, it's if you want to do a good job for people, just get the word selling out of your mind and pretend you're like a doctor. So if you were going to a doctor and you walked into their office, and then as soon as you sat down, they come walking with 2 bottles of pills and said, "Here, take these." That's their prescription, right? They go, "Would you trust what they just told you?" You'd be thinking, "Oh my God, the guy didn't even check me out. He doesn't even know what the problem is. And he's prescribing me drugs." That's ridiculous. But that's what I see a lot of people do in real estate. They could be sitting in front of somebody for the first time. They got a performa, and they're showing them this performance. And you got to do this. Here's this, here's these numbers, this, and here's the ROI, this, and this, and this, and this. Well, you're prescribing before you've even talked to them. So, as a doctor would do, you'd sit down and you'd ask them a lot of questions before you start prescribing. Like you'd be asking them, you might want to try to find out what their risk tolerance in investments is. You might want to find out how much cash they have available. You might want to find out what their investment timeline is at 1 year, 5 years, 10 years, 20 years. You want to find out maybe their thoughts and beliefs on investing, So I've had people come to me because they've heard about me, so it made it a little easier, not so cold, but they wanted to, they thought they wanted to joint venture with me. But after asking them enough questions, I actually found out it was a better fit for them to just invest cash with me for a flat rate of return. Now, my belief is I'd rather own and have part of an asset. It doesn't matter what I believe. I'm prescribing for them and what's a fit for them. And that ended up being the better suited to them because I asked the questions.
Now, so guys, I hope you have a pen and paper because I'm trying to feverishly take as many notes as you guys are. So I hope you guys have that. So Arlen, some of the metrics that you look at in order to prescribe a good course of action. So here's just a few of them that you've mentioned. A risk tolerance. How much capital they have available. Could be capital or could be access to a line of credit. Both cash or credit. It's important to know where the source of the funds is coming from, isn't it?
Right.
Their timelines, their belief of an investment. Do you get a little bit of somebody's like a background of a history of other investments they're in, or if they're in real estate? Like what other metrics?
Yeah, I'll ask them where they have money invested right now. Sometimes it's people have no money invested. Sometimes they have it in RSPs. Sometimes just sitting in the bank. It could be all kinds of things. And then if where they have it, you might ask them, what made them choose that, or are they happy with that? If not, what is it they're not happy about? Again, you're just asking a lot of questions. I mean, and sometimes you'll get some crazy answers that you didn't expect, but you don't know unless you ask the questions. You have to listen.
Yeah.
Not wait to talk.
Now, guys, I've listed 1, 2, 3. I've listed like a dozen questions, and you haven't talked about a piece of real estate yet, Arlen, have you? You don't know if you can help them first, right?
Right, and I could. Why would I go off on a tangent talking about a piece of real estate if that is not the fit for them? I just wasted my time. Maybe the fit for them was they shouldn't even invest with me. It doesn't make any sense. They should leave it in a GIC and whatever. Or maybe they're, like I mentioned before, maybe it's better to just invest it as just a cash return, like a flat rate of interest. Well, I don't know till I ask the questions.
Yeah.
It's a fit for them. I have my opinion, but I'm not there to make them do make them believe exactly the same way I believe. I will tell them why I believe what I believe, but you have to do what's a fit for them.
Yeah. Now, you asked one of the questions, and I think this is you will ask one of the questions about how much capital somebody has available to invest. Right. Have you ever had anybody resist answering that?
No, but what I do when I sit down with people, as I say, I'm going to ask you a lot of questions. And I'm just asking you these questions, try to help to figure out what's going to be best for you. If there's anything I ask you that you don't want to answer, just tell me you're not going to answer. And funny enough, I've never had anybody tell me I'm not answering my question. I've never had it because they know I'm there to try to help and diagnose, just like a doctor. If a doctor was asking you, what hurts? I'm not telling you. What?
Well, it's funny. That's the analogy I used when I had a conversation with somebody the other day, and they were, not forthright with I asked the question is, what do you feel comfortably investing, to start typically, right? And somebody wasn't comfortable doing that. And I said, well, here's what I'm trying to do is pretend I'm your doctor and you've walked in and I'm going to sit there and go, does it hurt here? Does it hurt here? Does it hurt here? Let's just cut to the chase. Like, let's see if I can help you and let's find out where you hurt and let's see if we can get you going on the right direction.
Yeah, and I think it actually a lot of time it bodes well for you to be bold, because people like to, if they're going to invest with somebody, they like to have a sense that they're a leader. And if a leader is scared to ask a question, or a leader is afraid of an answer, well, they're not a leader then. So you may not be the person to give them money. You want to be bold, not be afraid to ask those kind of questions.
Yeah. Well, isn't it true that you would have a different prescription for somebody who had $10,000 versus somebody that had $1 million? Would you not have a different prescription for them?
Right. And I might have a different prescription for someone that's 25 years old versus 75 years old.
All right. Well, let's get into some of these. So let's do. I know we're committed to do some role playing here tonight. So how would you, if you were having the conversation with somebody, and they were just reluctant to give you a number about what they have as available capital to invest, how would you handle that? How would you have that ask those questions?
Well, I mean, it'd be really simple for me. I go, and if you don't want to tell me that, that's fine. But if you can't tell me what you have to invest, I can't. There's not much I can say to help you. It's just like the doctor thing again. If you're not going to tell me what hurts, it's kind of hard for me to diagnose. Again, strangely enough, I've never had somebody not tell me when I asked anyways. So I've actually never come across that objection.
Yeah. And you do it because you just preface it up front as I'm here to help. And if you want help, I need some information in order to diagnose an investment opportunity.
And I give them permission to not answer. And it's because I give them permission to not answer that they answer everything that I ask. Yeah.
Well, it's interesting how the conversation I had with the fellow was they were unable, and I said, I don't want to waste your time because I don't know how I can eventually present you. Are you watching the hockey playoffs? And I just left it. I just moved on from the conversation. I had no attachment of me doing a deal with them. My attachment was to provide them something to help them. But if they weren't willing to give me some little bit of information, I don't know. I don't want to waste their time anymore. So, but the interesting thing is they reached out to me to have the conversation. And then I will come back and I said, so Flato, what was your main intention of you wanting to have this conversation today?
Right.
And it's a pretty quick question to get to the bottom line of, I just wanted to, whatever, right? Okay, good. Now we're clear on what the intention is. All right. So Arlen, you've, let's talk about, we've talked about sales. What about objections? What's your take on how do you reframe? Some people think of objections as rejections, and they almost look at it that they look at it as a shot on your self-worth if somebody has an objection to what you're doing. Can you maybe share a little bit of insights into objections?
Well, first of all, objections are good in the sense that they're telling you what the hurdle is that you got to overcome. Unfortunately, most objections aren't the real objection. So you usually got to dig a little bit to figure out what the real objection is.
Do you have an example there? What do you mean by that?
Well, sometimes you can have somebody say, I got to talk to my partner before I can answer anything.
Yep.
And sometimes that's true, and sometimes that's not. I mean, sometimes it's easy to find out. Like, I mean, say they say their wife. Well, ideally, you should be sitting if they're married. You should be sitting with both of them to begin with, anyways. That would be a sharper thing to do. But if not, it might be just a simple question like saying, "So if your wife was 100% all for it, that means that you'd be all in then." And then you can look and see, do they stammer or do they answer quickly yes? If they stammer, that's not the real objection. And it's your job to go back. So you didn't bring enough value yet, or it's not a fit for them, but you got to go back and find out what the real objection is.
All right. So Arlen, I was actually writing a note down when you said, so can you repeat that magic phrase one more time about so if your partner was on, can you repeat that one more time?
this stuff all comes so natural to me. So I gotta think, okay, so if your partner was excited and absolutely want to do this, that means that you're in that.
Wow, what a great question to ask. Right.
You just watch. They might say, more than likely to say yes, but you're watching to see if they stammer and hesitate. Because a lot of times people are too afraid to say no.
Yeah.
So you have to really, that's why I like body language and why I like being in front of somebody, because you get that sense of really where they're at. Yeah. You got to be actively listening and actively watching so you know where you're at.
Okay, well, let's role play this. So let's say I say, absolutely, she's on board, we're all in. How do you handle that?
Okay, let's pick up the phone. Let's give her a quick call.
And then you're going to watch the body language and things like that now, then, aren't you?
Right.
Or you're going to pull out the calendar, and at a worst case scenario, you're going to book a follow-up appointment.
Absolutely.
So, okay, awesome. So let's say that I stammer and I just go, geez, I don't know. My wife's not really on board with this kind of stuff already. So I don't know if I'd be able to get this past her. She'd probably just say, what do you, Russ? That's another one of your harebrained ideas. Sorry, if I'm really truly projecting. No, it's not one of your harebrained ideas, and we're not having this conversation. And I'm a little bit, we're having this conversation, you and I, and let's say that comes out that my spouse isn't on board with this. How do you handle that?
Well, let's say, so it sounds like you are. I'm watching for body language, right? But then I go, would it be helpful if we just sat down, went for dinner or something, and you brought your wife? Then she could ask me any and all questions that she wants. Would that be helpful?
Absolutely.
Then we do that, right?
Then you would pull out the calendar and book another time.
Right.
Right. So guys, you're going to come across that where you're going to have a conversation with maybe one of the partners that's there, one of the partners isn't there, and one of the partners might not be on as board as much as the other partner. And you need to have all parties involved. And at the end of the day, Arlen, would you ever do a deal with somebody if the other partner wasn't fully on board and it would cause them to have some issues?
No.
you answered the question before I even finished asking it.
No, because that's going to come back and get you later.
Yeah.
There's no point.
Yeah. And how can you answer that question, Arlen? Have you learned from experience from that one?
Actually, I haven't. I just know better on that one.
That was just one of those no-fly zones that you would never go
exactly.
down. Right. If both partners are not on board, do not move forward. Really, because guys, it's an awesome responsibility that you're going to be taking on to potentially working with investment partners. And if they're not fully aligned, one of my favorite words is alignment right now. If you're not fully aligned in what you're doing, the answer is no. Just don't do it. Okay.
No, absolutely.
Okay. So let's dive into a few more. So we talked about, for example, what are some of the questions you ask for somebody about risk tolerances to flesh out somebody's risk tolerance about what they do? What would be some of the questions that you would ask?
Well, usually most of the stuff I'm kind of doing in conversation, so it doesn't sound like the Inquisition, I guess, if that would make sense.
You're not sitting there, okay, question 17.
Exactly.
Tell me about your investments and are you happy with their returns?
Right. So usually it's in conversation, and that usually comes from when I'm asking, so where do you have your money currently invested in? And say someone says RSP. So what made you choose an RSP? And then they'll tell me why they chose it. And they'll say, so what's your typical return on your RSP? Right. So I'm asking all of that stuff. And, with enough questions like that, you're putting all the pieces together and figuring out how they tick. A lot of people, they don't even know how to answer. They don't know how to answer themselves. They've never thought about it. It's like, you've heard the saying, people can spend more time planning their vacation than making their investments for their future.
Yeah.
So a lot of times they didn't even think about anything anyways. They just kind of did something.
So really what you're just trying to do is you're trying to piece together a puzzle in essence. You're getting all the information, you're making mental notes of everything. Right. And this is not the right term to use, but I'm going to use it, is that you would then take all that information and then help them to prescribe a remedy for them of moving forward with an investment. Arlen, what would you do for somebody for timelines? If somebody, I guess everybody's timelines are a little bit different. So what if somebody comes in and they say their timelines is they need to, 6 months or less? Do you have how you handle that, or do you typically work with longer timelines? What is your prescription you offer when people talk about timelines?
Well, usually when someone says something like that, I qualify that, because they'll say that and they'll say, well, so what is so what's meaningful about 6 months? What's the magic to 6 months?
Right. I need to start creating an income stream here within the next 6 months because of X, Y, and Z.
Yeah, right. Then I go, so with your money right now, what kind of income stream is it giving you?
That's why we're talking, Arlen.
Okay, so with your money right now, what kind of income stream is it giving you?
It's not giving me anything at the moment.
Nothing.
Yeah.
So anything above 0% would be good for you then.
Yeah, I would. Well, I guess, yeah, that would be a step in the right direction.
So what are you looking for? Like, what kind of return are you looking for?
Well, realistically, I'd love to get into a point of getting between, say $7,000 to $10,000 a month.
Okay. So based on what kind of money as an investment?
I've got $5,000. Can you help me? No.
I'd love, if you could figure out something that works like that, sign me up. I'm in. I'm going to retire and I'm going to give it to you.
But here's the thing, guys. You will have conversations like that all the time, but somebody has an expectation of, and I'm not trying to be harsh, but somebody has an expectation of maybe they have $30,000, but they want a $10,000 a month income stream within a year. Now, I'm not saying you can't do that. It's going to be it's put this way. It's Arlen and I can't probably help you to accomplish that.
Right.
So it's just being real, and just the conversation that we're just having is you're just being real with me. So let me ask. So let's say I change my answer, and let's say I have access to a couple million, $2 to $3 million that I'm comfortable putting up, and I'm also comfortable to potentially qualify for some financing up to a maximum total position of $5 million. Is that something you can work with?
Yeah, that's something we can work with.
You got something to show me now, or what's the next line of question you want to have with that?
I've never shown people specific deals. I mean, well, I have once on a really big multifamily, but usually I'm selling the concept. And say if they're investing in real estate, I'm showing why real estate, why I believe in it. Like I like the line a lot of times where I'll go like, with real estate, you have your tenants paying down your loan. So it's like, why contribute money to an RSP when you can have somebody else contribute to your RSP? One of the main things I'm looking for is try to figure out what their expected rate of return is, because I always want to do my best to be able to under promise and over deliver. Like I've had one guy say 40%. And my first answer when someone says something like that is, oh, so where are you getting 40% right now?
I'm getting it within my business.
You know what? I actually had one guy say that.
Yep.
He was going to give me his money, and it was $3 million. And I asked him about his business, and I asked him what his ROI was in his business, and it's about 40%. And I said, do you have room to grow and reinvest it? And he said, yes. And I said, then it makes no sense to give me your money, because why not leave it where you have 100% control? It makes no sense to give me your money. Although I'd love to take it, it doesn't make any sense.
Yeah. And that's just being honest. Well, so with things. Now, guys, here's what I'm going to just share with you. What you guys are watching right now is a veteran in the trenches of doing this 25 years. Now, most people at this point of having a conversation with somebody, and maybe somebody said they're willing to put up $100,000, most people will be sitting there and they've already got a pro forma in their back pocket and go, here it is, here's the deal. And here's the cash flow. Doesn't the cash flow look great? And they all of a sudden just spewing numbers and having that conversation there. After how many meetings do you typically have with a person? Do you start actually ever talking about a specific piece of real estate?
It varies whether, have I ever met them or know them from before? Do they know anything about me before? Right? Because if they don't, then it's going to be a few more meetings, because at the end, to begin with, it's got to be pretty casual and talking personal and seeing if they're a fit. I mean, I like using the analogy for joint ventures of mine is, will they pass the chug test? In other words, are they a person that you'd actually go out for beers with outside of taking money out of the equation? Would they be fun to hang around? And they might as well figure out the same thing with me if we're going to be partners. It's kind of like in a marriage. You might as well like each other too.
Yeah.
So for me, that is an acid test, but it should be an acid test for them also. So,
Did you just call it the chug test?
Yeah, the chug test.
The chug, as in chugging a beer?
Exactly. Pass the chug
Hey
test.
guys, you want to write that one down? Is the Arlen Dahlin? We should get you a mug or something, a beer mug or something. Is the chug test, and that's what you have as celebration with your money partners.
It's spending some time, and when I spend time with them, it's usually 75% shooting the shit, just talking, just personal stuff, and at most 25% about business, at most, until maybe the last meeting where you're really defining things and setting parameters and doing your best to under promise and over deliver. Like, I mean, Russell, you know me, I like to set the bar so low you could trip over it. With my partners, like, they're talking about cash flow, and I always say there'll be no cash flow.
So yeah, so that's usually a question people ask. So what's the cash flow on this property? How do you answer that?
And I always say so each time a deal pops up, you'll have the same answer from me. There'll be no cash flow. And I tell them the reason why I say that, I can tell you what you want to hear, or I can tell you the truth. But if we're going to be 80% leveraged, and I showed you pro forma, yeah, it's going to show cash flow. But the reality is, in real estate, things happen. I mean, it could go perfectly. I'm not saying it doesn't. I've had a lot of properties that go perfectly, but one bad move out, one bad tenant, one furnace going down, when you're leveraged that high, it takes up a lot of money. So I want you to base your decision based on there is no cash flow. Just like when you do your RSP, there's no cash flow, and that's what I want you to base it on.
Right.
If you're wanting cash flow, is that's your number one priority, let's talk about the other options where we can do fixed rate of return investing.
Yeah, that comes back to that prescription that you have for somebody. You want to find out from somebody very clearly what is the most important criteria. Are you okay with cash later, or do you need cash flow today? And that just helps you prescribe something. If somebody needs a monthly payment and needs cash flow today, I'm not saying you can't, but it may be more difficult to have an investment opportunity that you offer an equity position into that person. There might be a private lending position, but it might not be an equity position.
Right. And I've had people in the past say, well, I talked to some other investors and they said every deal they did, they got lots of cash flow. And I said, but I'm telling you, do you want me to tell you the truth, or do you want me to tell you what you want to hear?
Well, no, I want you to lie to me, Arlen.
Yeah, exactly. So, and I mean, I preface it with saying, there could, if things go better than normal, of course there's going to be cash flow. And we can decide at that point whether we want to leave it in the company to be extra conservative, or if we want to distribute a bit. But I don't want you to invest with me counting on that. This is think of it like your RSP. This is a long-term equity investment. That's what I want you to think of this as.
Now, you also have a wonderful way of handling the conversation. So let's say I ask you the question. So what's the ROI on this property going to be, Arlen? What's your expected ROI?
My answer is always, how long is a piece of string?
Yeah, I knew you'd say that. And you're consistent, because that one of the other videos we did too, you answered it exactly the same way. So
yeah, well, I always tell them in real estate, I mean, I'll sit back so you can see my hand, I guess, is real estate doesn't go up linear. Real estate does like this, and it might take a dip like this, and then it ends up here, but it goes like this. So your ROI, I remember when I first started, the market wasn't that good. So my ROI in the first few years would have looked really bad. Not negative, but wouldn't have looked nothing impressive at all. But then by the fourth year and the fifth year, all of a sudden I looked like a rocket scientist, and you amortize the ROI over that 5-year term, and it was fantastic. I just tell them why real estate, why I believe in it. And I like to always go back to debt pay down, because I always say that there's your worst case scenario is over 25 years, someone pays off the mortgage free and clear. The rent is indexed for inflation, and you didn't pay taxes along the way. That's your worst case scenario. Under the worst case scenario, what kind of investment does it sound like for you? Of course, there's upside. We've all seen equity appreciation. Average equity appreciation from 1962 to now is about 6%. But let's not count that. Let's be conservative.
It's interesting. I just had a conversation with somebody yesterday, and after our conversation, and this was our third conversation, and I put an opportunity in front of them, and the next level of analysis I'm doing for them is, what does it look like? What does this analysis look like if there was no appreciation over the next, say, 5 to 7 years? What does it look like? And then also, what does the numbers look like when you start factoring in disposition costs and commissions and all that kind of stuff too? So we just want to get a complete picture with things. So,
I mean, one of the things I always like to go back to people on, I always say is, McDonald's is not a hamburger company. They're a real estate company. They own all the buildings. As a franchise, you can't own the buildings. They own the buildings in prime locations. So how good of an investment does real estate seem to be? All the banks, they own the tall towers downtown with their big logos on, because they're using your money, your deposits, to invest into real estate. We've all heard the same quote saying, what real estate's the best investment vehicle for wealth. I'm going, I might not be the sharpest knife in the drawer, but it does make sense to follow the path of least resistance with the most success and do what others do.
When it does come time to present an opportunity to somebody, how do you do it? Do you pull out a big PowerPoint presentation, or do you just have a piece of paper? Like how does Arlen present?
I do it a lot different than others, and there is not a right and a wrong way. But I train my partners that I make the decision on what we buy. I'm not running it past them. Like I said, it's going to be real easy, because it's going to be, say if it's going to be a single family property. It's going to be a single family house. It's going to break about even, and we're going to have debt paid down. I mean, that's all there is to it. After the fact, like I always like to give them pictures and, do stuff like that. But I'm the one analyzing the deal. And the reason why, it's because that's why they have me. And sometimes it's kind of a joke. I always joke around and tell them, I go, here's the thing. Like I'm saying, say I'm using you, Russell, as an example, and say you're an engineer. I go, here's the thing. This is what I do is real estate. And if you're investing with me, that's awesome. But you're also running your engineering firm and making money from that, right? This is how I make money. So I'm more motivated to make money than you are. Because worst case scenario, we don't make any money. You still got your income. You're still making your money from your engineering company, but I made nothing. And Russell, I really like you, but I can't afford to work for free. So I'm more motivated than you to make money. So I need you to empower me to make the right decisions for us. That's why you have me. And then I'll turn that around again say you have an engineering firm. And I'll say, Russell, let's pretend in your engineering firm that you have the opportunity to double your capacity, because something great just came up, but you need $1 million injection. So you came to me. So I gave you $1 million towards that. Would you want me to start telling you how to run your engineering firm? No, you wouldn't, because Arlen doesn't know what the hell he's talking about in an engineering firm. And I wouldn't want you to listen to me. Same thing goes the other way. That's why you have me. If you think you know, and there's no offense to that, if you think you know better how to analyze a deal or pick a property than me, then you don't need me.
Okay, guys, did you guys just get some of that? Like now here's the question I'm going to ask Arlen is, now I know this is you're 25 years in the business, and you've been doing this, and you have hundreds, if not thousands, of these conversations. Was it always this way? Did you start like this, or did you how did you get to that point where you have those just matter of fact conversations and stating your point? Were you that confident right from day one, or was it just something that evolved over time?
Oh, no, I wasn't confident. I mean, I was logical enough to know when I was green that I was green when it came to investing. But what I thought I was always good at is turning the tables and feeling what the person on the other side of the table would feel and what would make sense as an answer. And I actually like, when I sit down with people, is actually bringing up negatives about real estate. I make a point of it. Even if they don't ask me something and give me the opportunity, I will find a way. Because one, it's true. And two, it instills more confidence. Like, I mean, nothing is perfect and nothing is shiny. You got the slick talking salesman when they talk to you, this is fantastic, it's great, and it's perfect, and it'll always be awesome. That's not true in anything. So, like, I always have a joke. I say this real estate business would be easy if it wasn't for the tenants. We're going to get the odd bad tenant that's going to give the property a little bit of a beat down. No matter how good we are, we're going to get over a long enough period of time, we're going to get one or two of those. That's the reality. So I like to say some negatives.
And we're going to dive into a few of your favorite golden words here and magic words here as well. But one of the ones that resonated the most with me way back in the day was, and I use this a lot in different contexts, but if you don't make money, I don't make money.
Right.
And, and I'm in the business of making some money. So I have an incentive to make you a lot of money, something like that. Did I do it justice, Arlen?
No, yeah, that's right. It's like, I would like to say, if you don't make money, I don't make money, and I don't work for free.
Yeah.
No, I like you, but not that much. I always like to joke around, right?
Yeah.
So that's absolutely true.
Now, what are a couple of your favorite, what you would call, maybe some conversation starters and magic words and just things on how you just, I call them probably reframing the conversation. Now, I know we had a conversation about this earlier. What would be some of your favorite reframes of conversations?
I like, especially for somebody new, I didn't use this at the beginning, but it would have been nice if I would have thought of that at the time. But I like when you start if you're trying to present a real estate deal or just the idea of joint venturing, which is what I like to do, not present a deal, is saying like, I'm not sure this is for you, but, and the reason why you do that is because when you say it to somebody in their subconscious brain, you just took the sales pressure off. You already gave them an out. I'm not sure this is for you, but, and it puts people at ease and actually opens up their mind to actually listen now instead of resist what feels like or sounds like a sales presentation.
Hey, what would you put after the but typically?
So it might be something like, I'm not sure this is for you, but would you be interested in partnering with me on a real estate deal? Or if you even wanted to soften it up even more, you might say, I'm not sure this is for you, but would you happen to know somebody that may be interested in partnering on a real estate deal like this?
Yeah,
that even takes even less pressure off.
Right. That's an absolute gold. And here's the thing is, then once you start sharing some of the ideas and concepts and visions and stuff like that, that person may just come around and just go, man, I want to have that opportunity.
Exactly.
I remember I was having a conversation when I was sharing with some investment partners and I was sharing all these deals and I was having somebody was with me there just, as part of the conversation. And the person came to me and finally said, well, why aren't you offering me those opportunities at the same time? The fear of missing out sometimes is a very powerful force for people. What do you say to people when they say, I like to think about it? What's a way that you typically reframe that?
Well, one of the ways I like to do it is instead of coming across as obnoxious and pushy, like if you said, let me think about it, dude, what do you got to think about it for? I wouldn't. Yeah. I'd never do that. That's like that pushy, typical salesman, right?
Yeah.
What I like to use like the word just out of curiosity, and if you start with that, it just frames it soft and again not obnoxious. Just out of curiosity, what is it that you need time to think about?
I need to free up some money that's sitting in an insurance policy, and I'm just not quite ready. It's not ready to come. Haven't been cashed out for it yet.
So just out of curiosity, what does it take for you to get your money out of that investment?
Well, it's going to take a little bit of motion and moving, but most likely it's just going to be to get the insurance company off their tookus and get them to light a firecracker under them to pay me out the money that they owe me.
So does this make sense then to do what we talked about, get the money out of there and get it invested with me? Does that seem to make more economic sense to you?
Yeah, absolutely. I just have to think about it. Now that I think about it that way, you know what? Absolutely. I think it does make more sense. It would be.
Well, I don't know. You know better than I know, but if doing the stuff with me would give you a higher return, I don't know why we would wait. It doesn't matter to me, Russell. But I mean, every day you wait, it's costing you money, which would make no sense to me. Maybe it's just because I'm a cheap guy. I don't know. But I think let's get the lead out and let's go.
Yeah. Arlen, shut up. Take my money. It's honestly, I almost was going to make a joke that I need to put my wallet away because every time I have a conversation with Arlen, it's just like he's so logical in the conversation. I have nothing left to offer him other than, Arlen, just take my money, please.
Well, you actually said the magic word is logic.
Yeah.
You're just trying to work logic with people. You said the word right there. Yeah. That's what it is.
It's interesting how, and everybody has their own different style. You're a little bit more on the logic with people. I'm a little bit more on the emotion side of people. Like I ask people questions of, let's say we put ourselves 7 years into the future, and you made $150,000 from this investment. What would you do with it? Like, what would you do with your money? I'm going to ask you the question, Arlen. Let's say in 7 years' time, we made $150,000 and you got $150,000. What would you do with that money?
I don't know. And that's why I don't ask the question, because I just find most people will answer, I don't know.
Oh, Arlen, just play with me for a second. What would you do with it? If I sit there in 7 years' time, you got $150,000, what would you do with it? Would you go travel?
I might buy a fancy boat.
A fancy boat? What kind of boat would you buy, Arlen?
I don't.
Describe the boat to me.
Russell, I've never thought about it.
Well, are you partial to Campion boats, or are you partial to Sea Rays, or what's a fishing boat? What kind would you like?
You know what? It would probably be a fishing boat, because I'm going to be by then I'm too old to water ski and wakeboard anymore. So it will definitely be a fishing boat.
Yeah. How old are the kids? 7 years from now, how old are the kids?
Oh, I got to do math 5 times 3, Russell. You're making my life hard here. Yeah. It'd be like 23, 20. And 18.
So all of them would be sort of in the drinking age. Oh, in Alberta, absolutely. 12 is the drinking age, isn't it, in Alberta or something?
Yeah.
So you guys could all be sitting on your boat, in the fishing boat, with a beer in your hand pretty well, and having a beer. And nothing better than a cold beer and a fishing rod on a nice summer's evening. And you're sitting on the boat that you just paid for with the $150,000 that we did in a real estate investment opportunity. Wouldn't that be kind of cool to have that come to fruition?
Yeah.
So would you be interested if I could show you a plan or a path on how we can get you $150,000 in the next, say, 7 to 10 years?
Sure.
Okay. You just gave me permission to make a presentation of an opportunity to you. Right. So different styles, a little bit different. I did a little bit more coming from an emotional side about putting you in the picture of the fishing rod and the beer and the kids and the fishing boat and what would you do with it. You do a little bit more from the side of a logic. And I think somewhere between those two, there's something very powerful if you can do both of them at the same time.
Right. And for me, I mean, I do a lot of things different too. Like I'm kind of closing or selling with logic, but along the way, I mean, what we're doing, it's not natural and it's not real, but I'm always using humor. Like I'm pretty ballsy in my humor too, because one of the things I'll say to people sometimes I'll be joking around with, dude, you sound so cheap that the only way you let go of a nickel is to get a tighter grip. Like, let's go, let's get this going. I'll always joke around and have fun and get them laughing. That's for me, and I think it sets my nerves a little bit at ease too. But for me, that's what's fun.
Yeah.
So I like sarcastic humor, and I like to get people laughing.
Yeah.
Because I think half of it is if I'm fun and I pass the chug test for them, they're more apt to do something with me too. Yeah. It's not bull crap; it's all real.
And we we tend to do business with people we know, like, and trust. Right. And I would imagine for you, if you ain't having fun doing a transaction or deal, working with somebody, it's probably a hard no.
Yeah. And I remember years ago, I heard from somebody too, and I never forgot it. I actually wrote it down. Their version on selling, they always said there's 3 E's: entertain them, educate them, and then empower them to invest with you. So entertain them. That's where I have my humor. That's where I have fun.
Nice. So, guys, I hope you're keeping track of a couple of those phrases that Arlen has used. I might have to get this one transcribed or something, Arlen, because there's just that much gold in it that we have to pull things out. So I made note of here is, I'm not sure if this is for you, but that's one of your magic words. And then another one is just out of curiosity, right? Is another one. Do you have any other ones that you use that you like to share?
Well, sometimes this is a good one to remember, especially if you get stumped and you're not sure what to say or do. When someone asks you something, or they say, I don't have time, I don't have the money right now, I need to speak to my partner, all that kind of stuff. If you kind of brain lock and don't have time to say, what makes you say that? Now you have to watch your tone. Like if I say, what makes you say that? That wouldn't come off too good, right? If you go, you do that confused look and go, well, what makes you say that? And they'll expand and explain it. And then you just got your answer. So that's a really good one. That's a very universal one.
What makes so
use
guys?
it,
I hope
someone says,
you're writing that down. What makes you say that is another
right.
one.
Someone could say, it could be anything. It could even be, well, I want 25% return on my money. Well, what makes you say that?
Because
Well, I want it.
Yeah.
Okay, well, but what makes you say 25?
Yeah.
And I have no idea what they're going to say, but they're going to tell you. And it gives you a better idea where you're at and if you're a fit.
Yeah. And sometimes at that time, it's a good place to, if somebody is maybe making something that they want that's maybe a little bit outrageous, right? I often soften that sometimes with, I sit there and tell you somebody wants something that's just sounds a little bit outrageous. And I often soften it with, yeah, I wish I was 6'7" and could dunk a basketball, right? And had a full head of hair. Unfortunately, that ain't going to happen here. I can only do what I can do, right? So what's your next choice?
Yeah, I kind of have a can line. I do that all the time too. When I get something like that, my line is always, if you told me I had to drive to Calgary in 15 minutes, it doesn't matter how much of a reward you're going to give me, it can't be done. So, there's nothing I can do. I'm not getting to Calgary in 15 minutes.
Yeah.
Can't do it.
Any other magic phrases that you use that come off the top of your head here?
Another good thing to do with people, especially if you're on the phone call or calling somebody and you want to meet up with them and that kind of thing, is I find is ask a question where the answer is no instead of ask a question where the answer is yes. In other words, think of it this way, Russell. Like, pretend you didn't know me and I gave you a call. Russell, do you have a few minutes to talk? Your knee jerk is
no.
I don't know. Maybe. I'm not sure. That's all the crap that's running in your head, right? I don't know. It depends on what he's going to say. Maybe I don't even like this guy. But what you'll find is everybody. Well, I should say everybody. Almost everybody will give the right answer when you say, "Well, if I called you up and said, Russell, would it be ridiculous if you could give me 5 minutes to talk with you? Would that be ridiculous?"
No, not at all.
You'd say no.
Yep.
Because no is easy to say.
Yeah.
So think of it. I heard a lot of people talk about, getting to yes and all that kind of stuff, but actually it works better to ask a question where the answer is no. Because it's easy for them to say no. It's harder to say yes. I know it would even work on me. Someone was saying Arlen, you got a few minutes. Well, in my head, I'm going, I don't know. But if they said, would it be ridiculous of me to ask you for a couple of minutes on a phone call? No, it wouldn't be.
No, it wouldn't be. Guys, here's what we're going to do. We're right around that 1 hour mark. And I do want to, you're good for some more time, Arlen? Are you okay if we maybe do some Q&A and stuff like that too?
Just before we do that, let's answer one question that I get that I've had a million times. And that is, I get the question, why don't I just do it myself?
Yes.
I don't know. Have you had that? Why don't I just?
All the time.
Right. So in saying that, usually what I'll say to people when I get that, I always want to be honest, right? And I say, well, let's go back to the engineering firm that you own, Russell. and that is, so Russell, here's the thing. You know what? You started a business. You built it up to where you're at. Clearly, you're a sharp dude. Now, when you started your business, you're probably rumbling, bumbling, stumbling, putting in long hours. Maybe even your first couple of employees are making more than you to begin with. But you fought through it. You did everything it needed to take. You made a bunch of mistakes. You got it figured out. You got it right. Now you're rocking and rolling. It's no different with real estate. So here's the thing. If you wanted to do it yourself, yeah, you need to, you spend some thousands of dollars on maybe some real estate coaching and courses. Go to a bunch of seminars. Dedicate a lot of extra time to learning, knowing you're going to step on a few landmines along the way, but eventually you're going to end up doing great. The question is that the path that makes the most sense for you? I can't answer that. So you got that path that you could take, which, you know what, Russell, I know you'd do good at it if you decide to go that route. Or you have the path of working with me where I'm going to buy better than you. I'm going to manage better than you. I'm not going to step on the landmines that you may step on, because I did that years ago and got those things figured out. And when it comes time to sell, I'll probably do better on the sales side than you. At the end of the day, though, I'm getting half. So it's probably a wash, right? It's probably a wash. It's just that one is a lot of work and one is not. You put it in my hands for half the deal, and I do all the work to take care of it all, and you have more free time, and you just take care of your business, doing what you know. And Russell, I don't know what's the better decision for you. Only you can answer that one.
Wow, Arlen, shut up. Take my money already. But here's the thing, guys. One of the things that you have to establish, it comes back to asking all those questions early, is you need to find out if a person's time starved, if they have a challenge of the time, right? And that's why you can have that conversation with them and just say about the time and effort that you're going to put into it, that person doesn't have the time.
Right. And I usually, even if they're thinking about maybe doing it themselves, I'll even say, you know what, if you get going on yourself, you have a couple problems, you have a couple questions, don't be afraid to give me a jingle.
The last thing you want to do is a deal with somebody who thinks they can do it themselves. Always, no matter what, it's just you're gonna be fighting an uphill battle. And now I have a story for this. Is I was working and negotiating with somebody, and I gave him some options of things, and one of the options was to do a joint venture. And then I even went to my source, my best source, to find a really good opportunity. And I found a really juicy garage suite opportunity in Edmonton, like just as rare as hen's teeth sometime to find one of these opportunities. And when I have a conversation with somebody, I tell them up front is, I want you to make sure that I earned the opportunity, and I never ever want somebody to have the feeling that they can go do it themselves. So I actually bring that up in the conversation early, because I need them to be okay with working with somebody else. Because if they want to do it themselves, by all means, I bless you to go on your way. Okay. So the story is, I found it, went there, and I was just sensing something when I was talking to the person, and I was sensing something. I said, just, what's up? What's up here? And they just said, you know what? I think that we can do this on our own. I said, I know, I think you can too, but just understand here, this, and this, and the time and all that kind of stuff. They said, you know what? We're committed and we're prepared to do that. I said, no problem. Do you want this opportunity that I just presented to you to go do it 100% yourself? And they said, you do that? And I said, well, remember, my intention was to make sure you get what you're looking for and to help you move forward. If you moving forward means you do this deal 100% yourself, I'll go find another one. And they came back after and they said, wow, they just had so much more respect for that after. And I'm pretty sure the door is open that person's going to come back after the fact, because I didn't say, well, that's my property. I'm taking my ball and I'm going home and I'm not going to play. I just said, you take this property and you go close on it yourself then.
Right.
And the person did. And I will be there right beside them celebrating that they did it. Because remember, my goal was to help them move forward and do what was best for them.
The other thing I always say, you've probably heard me say this, Russell, but I've said to everybody that I've ever joint venture with, is a lot of times I get to yes or almost yes that they want to do it. And I said, well, I want you to think about it, because here's the thing. If you're going to be nervous about this and you're going to lose sleep at night with this, I don't want you to do it, because it's not worth it. It'd be better for you to make a lower return, leave it where it's at, than invest with me if you're going to lose sleep at night over this.
Guys, I hope you wrote that one down too. That is a goal. That is some magic words too.
I mean it, but it's got double meaning to it. One, it gives them an easy back door, which actually I've never had anybody take. But I actually mean it. An investment isn't worth it to somebody if they're going to lose sleep at night and worry every day. Also, on my side, there's a vested interest for me to say that too, because I don't want to ever have to deal with a partner that's going to call me every second day because some headline or something they've seen in the news. I don't want to deal with it. Yeah,
and you have something to come back. Let's say 6 months after you close, that the person's coming back, and every 6 minutes is sending you this news article and this news article and this news article. You can come back and say, remember we had that conversation about asking you if you would lose sleep over this? Right. Are you changing your mind on this now?
Yeah, exactly.
Right. And I had somebody, family friend who, literally within 6 months of getting involved in an investment, they got scared after the fact. And I think it was also they got married. They got married, and the spouse was not part of the negotiation from the beginning. And I just said, okay, well, I don't want to lose sleep, or I don't want to lose a friendship out of this. So why don't we just cash you out? And I found a new partner to come in and cash them out.
Right.
On the deal too. I just didn't want to take it on of having somebody have that anxiety of a stress of a new marriage. Right.
Right. But the thing is too, when you're doing this with joint ventures partners, you still got to be a leader. I'll say to people, so what do you think about real estate? You think it's a good investment? I go, to me, it's a complete no-brainer. It is the best thing out there, and I'm all in on it. I don't have money in all kinds of different things. I'm 100% on real estate. So do I believe in it? I mean, 100%. That doesn't mean that you have to, though. You ask me the question, I'm telling you what I believe. I'm all in. I'm 100%. No question about it. Not 99.9. I'm 100. The real question though that matters is, how do you feel?
So guys, did you guys watch that, for example, of people are looking for that certainty and people are looking for that confidence, right? That's what they're looking for from you.
Certainty.
Yes.
But you still got to do it in a way where they know they're still making the choice. I'm real clear about that. I said, I'm 100% certain. I'm all in. In fact, I got family invested in it, in real estate. So everything I say and everything I do matches that. But it doesn't mean that you have to feel that way. That's your choice. You tell me.
Yeah. Wow. Now, did you guys also notice it's like eyes open? You're like, he's engaged into it. There's no wishy-washy there, is there?
No, you have to be excited, and you have to be a bit evangelical. Is that the right word? Evangelical. There we go.
Yes.
So have to be, because people want to follow. They want confidence. They want to follow.
Wow. Now, for those of you that are listening on the podcast, I highly, if I do post this on YouTube, I don't know if I will. I have to get permission from the Raising Capital Academy members if I'm able to post this to the public, because I owe them something first, and I believe in people that have VIP access to have to get something extra. Always. So I have to get their permission. But guys, if you are watching this, and you will see just the way Arlen looked into the camera, which would be my eyes, and just calmly stated it, and then the way you asked the question at the end too, right? But that's what I believe. But what do you?
Right. That's when I started. That's what I had to get across that line to get my confidence, because I didn't have the confidence when I started. I believed in real estate. But I'll be honest, I didn't have 100% belief in myself. And then one night I just sat down and thought about it. I went, well, here's the thing. I know I can make it right if something goes wrong. I'll find a way to make it right. So it gave me my confidence. So I can go out there and talk with authority and talk with confidence. I mean, you think about it, Russell, if you're thinking about investing with me, you said, so Arlen, so you really like real estate then? And my answer was, I'm pretty sure.
Yeah, I'm dabbling.
I'm pretty sure it's good. I mean, you're not going to give me the money. Like, you need someone to say, like, no, I'm 100% there. I'm all in on real estate. I don't have investments in everything else. I'm not diversified. I'm all in because this is what I believe. Question is, the real answer has to come from what do you think?
And then really what you're looking for is, you're looking for me, if you were having this conversation with me, is I need to make a commitment. I'm in, Arlen. I'm all in.
Right. Or you're not.
Yeah. And you really don't have an attachment either way.
No.
Your attachment is that I make a decision.
I don't want them to do it if they don't feel good about it. I don't want them to.
Yeah.
I'm not there to talk them into something they're not comfortable with. I don't want to do that.
Yeah. You need somebody who's committed, not somebody who's interested.
Right.
Right. And guys, the famous thing of the difference between interested and involved versus committed is, this morning I had bacon and eggs. The chicken was involved and the pig was committed. So
that's true.
So anyways, but that's actually a joke that I use quite a bit to do the difference between involved or interested and committed at the same time with people. But that's what you're really looking for. You're just looking for people that want to be committed to the process. How does somebody practice this, or how does somebody rehearse this, or how does somebody get to the level of the way and the confidence that you just are sharing these answers?
Well, one of the things that I did both in sales and in real estate is, as I get objections, I'd write them down. And then I'd find, if you use the word, which is true, I use a lot of logic to handle objections, and I write down my answers. And then have those in my vehicle, and I made a commitment to read them every single day, so they could be like second nature. And you're going to endlessly be adding to it, but it's one way so things can just roll off your tongue and you're not stammering and not sure what to say. I mean, you've heard me say some stuff today on how, I mean, just a small percentage of the different things I say, but it has to work for you too, though. Like it has to feel natural for you. Like how Russell answers something and how I answer something might be slightly different. They might be both just as good, but they has to be able to be something that rolls off your tongue.
Yeah.
But that's one way to do it.
And just so get that notepad, write them down, and then just find out the answers, right? Guys, one of the things I help out with when I coaching people, we do have conversations like this all the time. And we rehearse, we practice, no different than if you're going on stage doing a live broadcast or a play. You practice the lines and you rehearse, and you stumble and you fall flat in your face and you make yourself look a little bit goofy, but you rehearse and you practice. Now, here's the thing is, the more you rehearse and practice the objections that come your way, the less objections you will hear. And I'm a firm believer in the reason why you hear less objections is because you're prepared for them. And when you're not prepared for something, it always comes up, right?
So like you said, one way is to practice with somebody else, go back and forth, make it fun, make it a game, just practice back and forth with someone. But even before you practice, I would even be writing down some of the main objections that you either perceive you're going to get or ones that you've actually gotten, and write down some logical answers.
Yeah.
I always, again, that's that salesman in me. You always have to remember, though, you always hear the saying, buyers are liars. So that's not, people take that as a derogatory statement. It's actually not. People don't mean to lie, but usually a lot of times they're shy to say no. So they'll use the excuse like, I got to talk to a spouse, or I need some time to think about it. So an objection sometimes isn't the real reason. You got to find the real objection.
I 100% agree, because sometimes it's like a layers of an onion. There's usually and sometimes you have to ask, what do you mean about that? Or why that? And you have to ask it like 5 or 6 times until you get right down to the real core of where it's coming from.
Right. And you got to be able to present your offer in a way where the value of what you're bringing is higher than the value of their money.
Yeah. Yep.
Right? If their value of money is worth more, they're not going to give it to you.
Yep. And just quickly share a story with you here of somebody who I was working with, and he was looking to do his first joint venture. He just, I think he was on his fifth place, looking to do his first joint venture. And we, for probably a couple months, not quite, maybe for sure a month, of multiple conversations of just rehearsing all the things of what he's going to say, what they're going to say, what he's going to say, what they're going to say. We back and forth, and we exhausted everything. Okay.
Right.
Then he went to have his meeting with his potential investment partner. And then after the fact, I came back and said, how many of those things that you rehearsed did he come back with? He said, not one. I said, but didn't you feel confident that you practiced and rehearsed it before you went to see it? And he felt that, and he just got his first $94,000 check this week.
And you're 100% right, because what he just did is he built confidence.
Yes. And right. And the person he was talking to felt that, because he goes, I got this. I anything he's going to say, as a matter of fact, you almost sit there and goes, are you sure you don't want to ask me about this? Right.
I mean, again, he probably did a good job too. Of course, as you know, in sales, the number one thing, though, even more important than being able to answer an objection, is the ability to listen.
Yeah.
You got to listen to what they're saying so you can understand where they're coming from.
And like anything in life, I'm a firm believer, the more reps you do of something, the easier it gets. And then when I'm coaching people, is I will put them into fairly dire questions, and I will really push people sometimes into really uncomfortable conversations, because right. I would not be doing my job as a good coach to not prepare you for something that's going to be a little bit easier when you have it with a real life person. Get off my soapbox here for a second, guys. So, guys, there's some questions that have come in. Arlen, do you have a few more minutes? We can dive into a few. Okay, so one more time, guys, if you do have a question, put it in the Q&A box and we'll get it. And if you do want to be piped into the live feed, if you just raise your hand, we'll help you out there. So Karen asked the question. So hi, folks. Your position is that your joint venture partner is responsible for the 20% down payment and the mortgage, correct?
Oh, yeah. But I mean, any joint venture is what two people agree upon. It doesn't have to be any certain way, right?
Absolutely.
I could be qualified and they're putting down the money. they can be putting down the money and qualifying. The deal can be 50-50. That's normally what I do. It could be 60-40, 70-30, 80-20. It's whatever two people decide upon. There's no right and wrong.
Yeah, and that can 100%. So the simple answer I give to people is there really comes down to 4 variables. And the good news is I'm from Saskatchewan, so I gave all the 4 variables that start with the letter M. It comes down to money, mortgage, management, and mastery. Who's providing the money? Who's qualifying for the mortgage? Who's providing the day-to-day operations management? And who's the master of the deal? And those 4 things need to add up. Right. So, for example, if I'm doing all the work, plus I'm also the real estate expert, and my partner is putting up the mortgage and the down payment capital, that's something that we have a little framework which we negotiate. And in that case, then that person would be putting up the 20% down payment, plus a reserve fund, plus they're qualifying for a mortgage, and that's it. Hope that helps, Karen. Tim asked the question is, do you get any income during the partnership at all? How do you answer, how do you get paid for handling all the work?
And I mean, again, it's anybody can negotiate whatever they want. In my situation, no, I don't get paid along the way. That's my job. I do, like if you're on my side of things, if they're qualifying and they're putting the down payment, the trade-off is I do all the work. And included in that work is, I have a cell bill, I got a gas bill, I got lunch bills with realtors or with property managers. I have all that kind of stuff. That's my side.
Yeah.
It's no different if they come up with money and they got it from a line of credit that they have to pay interest on. That's not my problem. Their job is to bring money. How they bring it is up to them. So if they're going to pay interest on it, that's what they're going to do. Same with on my side. It's if I'm buying lunches and buying beers and buying gifts and greasing up realtors and doing all that, spending money and all this kind of stuff, internet connection and freaking, all this stuff. That's my job.
So do you charge administration fees, or do you charge any fees, or do you charge acquisition fees, or do you do any of those for your deals?
I don't. There's no right and wrong.
Yeah.
I mean, you can do that. I know people that do it. I choose not to. That's just a choice of mine. It's not something I'm scared to negotiate. I know I can negotiate that kind of stuff in if I wanted to. I just don't.
So then a question that Amanda asks is, if you're bringing the deals to the investors, where do you make your money or profits? You can pay down real estate in the long term, but we all have our bills to pay on a short term for ourselves. So really, I guess the question is, you as the real estate expert, how are you making your money?
Well, I mean, again, I'll be honest, I didn't make money for a bunch of years. I mean, I made money on sale of property. I made money I could end up putting money in my pockets on 5-7 years down the line on a refinance. Technically, you could say there's money in cash flow, but I always like to stick with the mantra there's not. But technically, you kind of could. You're not going to be doing this full time, investing in long-term real estate and not have a job. I mean, that's not realistic. I mean, yes, you could do flips, and yes, you could do assignments and make money if that's your thing. But if we're talking long-term investments, no, it's not going to pay you for a number of years.
Yeah, then there would be an entire conversation that we could have here, guys. Is within the context of real estate, and this is what I help people with. There's make money strategies, and there's hold wealth strategies.
Correct.
Typically, buy and hold is not a make money today strategy, right? But you can do other things. You can wholesale, you can flip, you can, that's why a lot of people become, realtors or mortgage brokers or, property managers, or there's just different strategies. And sometimes people get confused on their long-term buy and holds, and they expect to make an income out of it. And they put, not to say it can't be done, but it's difficult. So here's a question for you, Arlen, and it's something that actually Morley brought up as well, and something that probably is the biggest objection and hurdle that we have to overcome right now is really market confidence in Alberta, right, with people. And how are you helping people with that, or do you not provide that information to people? How are you having those conversations with people about asking about the market?
Okay, so well, what I do, and it's all true, is I have a vague opinion. And I'll tell them my vague opinion, and I tell them that's all it is a vague opinion. Nobody under the sun has a crystal ball. That's a fact. So if I tell you exactly where the market's going to go, or if you have somebody else tell you where the market's going to go, they're full of shit. And I don't do that. I tell you the truth. So, like my opinion is, I think here in Alberta, we might have about another 3 years of flat and bumpy. And I think we have opportunity to really take off. Alberta, what a lot of people don't understand is pre-COVID, we already took our beat down. One, we took it in 07, 08.
We've been taking a beat down
for 08 yet.
We've been taking a beat down for 10 years.
Right. And then we took the oil price beat down, right? And then now we're at COVID. So basically, and the other thing is like use Edmonton for an example, we are the most affordable city in Canada, income versus housing values. At some point, they always go back to the mean. When is it going to go back to the mean? I don't have a crystal ball. I just know it's going to go back there.
Yep.
So I'm honest with people. Then I dial it back to what you heard me say earlier. And again, that comes from a prior discussion or an earlier discussion with a JV partner where I say, let's look at our worst case scenario. If we're budgeting right, the numbers are right, after 25 years, a tenant pays off our property free and clear, indexed for inflation without taxes. At the end of the day, does it matter? It matters because we could give us a higher return, but if we don't get that where we're at, we're still in a pretty good spot.
Yeah. And really you're just positioning it as we're in for the long haul and you can't promise anything, but you can have your best opinion on what you're doing and the actions that you're taking.
Right. And I tell them I want them to decide based on I don't like using these words, but the worst case scenario based on after 25 years, someone pays it off free and clear, indexed for inflation, and we didn't pay taxes along the way. That's it. Based on that, does this make sense? Yes. Then the rest of it is just we're hoping for gravy.
I usually have a conversation. Here's the thing. I usually do a little bit of a joke and say, you know what? My crystal ball broke about 12 years ago. And I've given up trying to time and absolutely predict futures of markets. But what I'm just trying to do is I'm just trying to find some really good new construction properties, some good assets that will cash flow and will be able to withstand the ups and the downs and everything in between. But just my pragmatic Saskatchewan in me is if you take a market, and I will, if I have somebody on this, if you take a market that's going like this upwards versus for 10 years, or a market that's been going like this, maybe even slightly down for 10 years, which market has a greater chance of going up? The one that's been going up for 10 years or the one that's been flat for 10 years? That's one of the reasons. That's just my pragmatic, simple approach to a market, because no market can stay in the bottom forever and no market can stay at the top forever. I would much rather buy at a property in a market that's been in the bottom for a while.
Yes.
So, and I don't get into anything else too much detail in there. Now, as a matter of fact, and guys, if you are following my channels, following my podcast, following my YouTube channel, I actually have in the background, I'm doing something what I call an Edmonton confidence campaign, where I'm trying, because that's one of the biggest hurdles I'm having at the moment, is to get people the confidence to invest in Alberta. I'm interviewing people in Alberta, in Edmonton, talking about opportunities. I'm building people's confidence to come back to Alberta to invest their money. And what I'm doing is, as part of it's an education, but part of it's a confidence campaign to attract investors to me at the same time. Okay. So guys, sometimes you just need to follow the people that are active in this. I'm an active real estate investor. Arlen's an active real estate investor. We're not just talking theory. We do these things on a day-to-day basis. We're in the market each and every day as investors of real estate. Sorry if I'm on my soapbox there, Arlen. But I'm a firm believer. I'm like you. I think there are going to be some challenging times, and no matter what market you're going to be in, but I think Edmonton and Alberta are in a good position right now. Future.
I see it as the biggest upside, and that's just an opinion. Like you said, neither one of us have a crystal ball. That's just my feeling.
All right. So a couple other questions here. Are all your joint venture investments long-term, or do you do any short-term joint ventures? Do you do any flip joint ventures, or have you done any flip joint ventures, Arlen?
No, I haven't, because you don't need to joint venture on a flip. You can just get hard money. Yep. There's no need to bring a joint venture. So I don't see why a person would do that.
Yeah, private lending right now would be how I would fund the flip portion. But then I would then take it once I've done the renovation, I would then bring a joint venture partner in for the hold. And it's funny, Arlen, I'm going to date myself, but I know there's Keyspire out there teaches this flip to hold thing.
Right.
We taught that, I don't know, 10 years ago we taught that. I should have named it back then and put a trademark on it or something.
Right.
All right. Andre asked the question is, how do you explain to a joint venture partner that cash calls are possible? Great question.
I'm a different type of person. So I address it that if, we're in a 50-50 partnership, if we make money, it's split 50-50. And if we lose money, I mean, like if there needs to be a cash call, it's 50-50. Now, I mean, we do it. Russell does the same thing. We make sure we have a staying power fund from day one. Then after that, I look at it. It's my responsibility. So at the end of the day, have I ever been in a position in my early days of where I've had to do a cash injection? Yes, I have. I like to say I haven't, but yes, I have. But I put it in. I didn't even call them, didn't even bring it up. And the reason why is just in my mind, I want them to buy the house once, not a second time, not a third time, not a fourth time.
Here's one of the things that I'm going to add to that a little bit is I 100% answered the same way as that if a cash call comes based upon our agreement, because we are co-owners and our ownership position is after the initial money that's put up, every dollar that's put in is split based upon our ownership position. And let's say it's 50-50. Here's what I then tell a lot of people is the good news is if you own this property yourself and a cash call come, how much of it are you on the hook for? You're on the hook for 100% of the cash call. Because you have a partner in this business with you, I'm on the hook for 50% of that cash call. So isn't that nice that somebody else is willing to potentially share that cash call with you?
Right.
If it does come. Now I've had cash calls, Arlen. My biggest one was a special assessment on 9 units of $43,000 a unit. And we'll save that for another webinar, right? That's not a comfortable position, but we survive and we get through those things and we endure and we move on, right? But the good news is we share those things and we're in this together as co-owners on this property. After the initial money is contributed, we will then have to contribute if a cash call is needed based upon our ownership positions. I'm an owner with you at the same time.
Right. Unlike your RRSP guy, that he'll call and he'll say, and I do say this all the time. I go, your RRSP guy will come back and say, yeah, yours only went down 5%, but the market was 10. And you're going, whippy ding, because he got paid still. If we were on the wrong side of having to do a cash call, I have to pay up half.
Yeah.
This is what I do. I can't be putting up money. I got to be making money.
Yeah.
So I'm more motivated than you to make sure that doesn't happen.
Absolutely. We're going to use this as our last question, and then we'll wrap up here, Arlen. Joel asked the question is, how do you address investors' question about taxes and legals? I know one of them is an easier answer than the other, but I think they're both.
That's a very vague question, but as far as legal, I mean, that's why they have me. I got a team that is this is their specialty is real estate investment and corporations. So that we're covered on. On the accounting side, I mean, I could hook them up with my accountant, or the accounting outside of the property, the accounting is up to them, right?
Yeah. Here's the thing is, if it ever gets brought up about taxes, I never have conversations with people about their tax situation or any after-tax monies or any of that kind of stuff. That's their responsibility to figure out their tax scenario. And here's the conversation I have with them. It is my job for you to have to pay a lot of taxes. Because if you pay a lot of taxes, you've made a lot of money and I've done my job. So why don't we just focus on making the money and then you could figure out how to pay the taxes? Does that sound fair?
Right.
Right. And then when it comes to the lawyers and the legal is, I've been doing this for, X amount of years and this amount of transaction. I have an entire team that we can handle that. If you need specific independent legal advice for you, I can recommend somebody, but I encourage you to get legal advice based on your position, independent of me being there as well. And it only makes good sense that you do get independent legal advice about this. those are how I have those conversations. Okay, so guys, wonderful questions, and I don't want to keep us here for too much longer. But here's the thing: is Arlen, anytime you and I have this conversation, we could go on and on and on. And anytime when I'm standing on the shoulders of giants, I can see far. And I consider your shoulders some of the biggest giants that are out there. And before we do wrap up, I want to offer you a couple things, and I will give you the last word here tonight. I want to give you a compliment and let you know how you are showing up of late, Arlen. You are leaning into some uncomfortable territory. You are not afraid to learn something new. And you're also not afraid to admit that you don't have all the answers and even know all the transactions. Some people say, well, you've made it, Arlen, 300 properties, 25 years, you've done this. But you're willing to step up, you're willing to invest, you're willing to give back, and you're willing to help a next generation of real estate investors. And I just wanted to thank you from the real estate investing community that I think you are an absolute treasure, and we need to get you more. We need to get the treasure out more often. So are you okay if we do a few more of these kind of webinars, Arlen? We
can, but you can't keep talking like that, or my head's going to get so wide I won't fit through that door frame there. I won't be able to get out of my office.
No, Arlen, you have made such a measurable difference on a lot of people's lives, and I don't think enough people have probably told you that. If it wasn't for you, I would have never, ever written that book behind me or created training programs on helping people overcome the obstacle of raising capital to help people get more tools to buy more real estate. And if it wasn't because of the cassette tape that I got in the mail one day that had your voice on it, that gave me the belief that I can raise some capital, if it wasn't for that, none of that stuff would have ever come to fruition. So I just wanted to thank you for that. Okay.
Oh, thank you.
And I want to leave you with the last word. What are maybe some final words of inspiration you'd love to people to that are here on today's call, of maybe that maybe need a little bit of Arlen Dahlin fire to get us to take the next step?
Well, I guess because this topic was sales, everybody just remember, you're not selling, you're offering opportunities. And don't take any type of rejection hard. It's kind of like if you went into a store and there's a green shirt and there's a blue shirt and you didn't want the green shirt. The salesperson wouldn't feel hurt over that. It's just your choice. The second thing is, and I think, Russell, you will agree, neither one of us, we've worked hard. We've done a lot of things right. We've made mistakes too, but neither one of us are overly special or overly gifted. We're just regular people. And we've done a good job. We've worked hard. That's part of it, was working hard. And everybody else listening can do exactly the same that we do. In fact, with a little help along the way, like Russell's doing and different stuff like that, you probably kick our butt. Because Russell and I did it the hard way, didn't we?
Yeah, it was back in the day where you had to wait an entire month in a cassette tape to get all this kind of information. Like right now, guys, you've literally 7 days a week, you could be on a Zoom call and getting this kind of gold delivered to you.
But we weren't coached neither.
Yeah.
We weren't coached neither. We just went out there and did the best we could and stepped on a few landmines.
Yes.
There's an easier way.
Yeah. I'm grateful that there are people like you in the marketplace, Arlen, that you're willing to educate and help and inspire the next generation. And we will, as a community of real estate investors, will be better for it. So,
thanks,
guys. So in the chat box, one last time, if you can just say a thank you to Arlen. Make sure you've maybe done a picture or a post or a tag. Tag us in your post that you've watched this, and that just some of the gold nuggets that have just been dropped here tonight. Yeah, I could go on here, Arlen, one more time, but I'm probably going to start getting really gushy here. But you haven't made a difference in a lot of people's lives. And I just want you to make sure you know that.
No, thank you. I appreciate that.
I sure hope you enjoyed this in-depth training video, and I applaud you for sticking around right to the very end. I believe in people that show up, put in the work, put in the time, and effort should be rewarded. If you're interested in taking the next step, if you're interested in going deeper and mastering what you just learned about in this training video, I encourage you to check out the Raising Capital Academy. So if you have found that you've received some value from the YouTube channel, or maybe you've listened to a podcast, you're only scratching the surface. That truly is just 1/10 of 1% of all the content and materials that have been created that are waiting for you on the other side. So I encourage you to check out the Raising Capital Academy. There's more than 100 plus hours of video content, audio content, exclusive training material for those that are interested in taking the next step, those that are interested in going towards mastery, those that are interested in moving forward with velocity. So I would encourage you, wherever you're watching this video, around this video will be a link where you can check out all the details of the Raising Capital Academy. After you've checked out all the details on that page and you're interested in moving forward with velocity, click on the link that will take you towards the application. This is by application only. This is a community program and is for serious action takers only. So if you want to step up your game, if you have goals and dreams and aspirations for more, if you'd like to make a difference in the financial futures of the most important people in your life, I highly encourage you to check out the Raising Capital Academy. Click on that link and you'll be taken to the next step in the process to see if you qualify to take the next step forward for you. Hope to see you on the other side. Bye for now. Hey, I sure hope you enjoyed this video. If you are interested in moving forward with velocity, if you're interested in being a successful real estate investor, only 2 simple next steps from here. Number 1, below where you're watching this, there will be an opportunity for you to subscribe. And over here will be a hand-selected video for you to keep moving forward. Continue your journey forward. Just click on over here for that hand-selected video for you, and we'll see you on the other side. Thank you very much.